Good afternoon. We're joined today by Juan Moreno, Managing Partner of Nassau Street Partners. And I'm pleased to say Juan is my fellow Managing Partner. We work together very closely. Juan, we want to talk about raising capital in the capital markets. We've seen some ups and downs. We've seen increases in interest rates, more recently, potential decreases in interest rates. How does that impact the capital markets? What do they look like?
So I think the last few years have been, very dynamic. Certainly we came off of a time in 2021 where it was very buoyant in terms of valuations and in terms of the ease to go out to market. It felt like you could have an idea and that's all you needed. Now you certainly need at least a defined path towards revenue. And you need to have a solid management team in place. When we're seeing that more and more. I think the last few years have also been defined by new actors coming into the space. I think we're seeing that venture, your traditional venture funds are starting to lose market share in terms of total dollar value deployed. We're seeing a lot of other entrants, whether it's from the high net worth space or from the family office space, come in and actually lead opportunities themselves as the GP, whereas before they might have been behind the scenes as an LP with the venture fund. And I think overall that's good news for the space, for the early stage companies that want to raise capital. You look at these groups, whether it's high net worths or strategics or family offices, by nature, they don't have LPs. They don't have timelines by which they have to return their capital. And I was talking to a family office not long ago who said that their time horizon or the time by which they want to exit their investments is never, right? And that's the mentality of some of the players coming into the space. And we find that to be fruitful because a lot of businesses are not set up for that J-curve growth. A lot of them are going to take a little bit longer and don't have that explosiveness. And so they get overlooked. So I think that's been a positive development. I think valuations as a whole are now looking stronger than they were perhaps 3 years ago. So overall, I think it's a good environment.
What about on the issuer side? We hear a lot about, obviously, AI is the hot button in today's market. What do you see in terms of issuers and how that's being driven in terms of industries, that type of thing?
AI, it's a hot part of the market, but it's a small segment. And I think it certainly takes up a lot of the media and a lot of the press, but we're seeing transformative companies across a wide range of sectors. At Nassau, we're generalists. We sit across the board. We're seeing that there's a lot of companies implementing AI, using it to transform industries, but we're also seeing other companies that have nothing to do with AI that are coming to the market and are getting a lot of interest. So, I think we're on top of what's going on with AI. We're certainly backing a lot of AI companies, but it's by no means a focus or our sole focus, not at all.
And how do you see the market looking out over the next couple of years and the political environment, maybe even geopolitical environment that we're in? How do you see that evolving with regard to capital raises?
Well, I think it's a timely question. There's been a lot of disruption in the Gulf. I think a lot of that capital has been spooked and is holding back. At Nassau, though, we focus on investors globally, whether it's here stateside or in Europe, in Asia. By no means have we seen too many impacts on our side. But I think certainly it's something to note that where there is geopolitical instability, where there is conflict, one of the first things that gets cut is the investment mandates offshore and planned investments in illiquid early stage companies. And so I think as a founder, the way you protect yourself is, number one, have a diversified cap table where your investors are geographically diversified and they're not all in one region. It's very important. If you're a founder and you have a lot of Gulf capital right now looking to raise a follow-on, it's a tough position to be in. So I think that's the first thing. And then secondly, on the investment banking side, I think it's important that we continue to develop our relationships globally and not over-index on one specific region. You run the risk, I think, of being overly committed to a region that then can pull back strongly in terms of their investment appetite.
So tell me, if an issuer hires Nassau Street Partners, what should that issuer look forward to in terms of raising capital? What's the process look like?
Well, the first thing that we're going to want to do is assess what's already in place. So a lot of people come to us with existing marketing materials. We're going to want to redo them. Very rarely will we use the existing ones because we know what investors want to see. We're going to make them ourselves. Financials, we want to get all of them in order. We're going to want to build out a data room that's strong. And then, when we're actually out in the market with a deal, I think one of the important things that we want to do is initially get as much feedback as possible so that we can go back and work that into the pitch, work that into the data room as much as we can, so that the fundraising process is an iterative process. It's not static. You go out, you get feedback, you build upon it. I think a lot of companies, they'll get their first 5 no's and they feel defeated. But each no is an opportunity to turn the next conversation into a yes. And so I think it's important to take a lot of feedback and take a lot of information from each investor conversation.
Well, thank you, Juan. Very good input.
Thank you.